bum, 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 ba-dum. I just sold all my Tesla. Yes, I did. And I just sold all my Dogecoin to buy the dip of the hottest stock in the world. Woo! Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And oh my God, one of my favorite stocks just got freaking wrecked. Now let's go check this stock out. I'm going to show you how much I invested in it. And then I'm going to tell you why I'm bullish on this company. You ready for the surprise, ladies and gentlemen? That's right. So Walmart is down 11% today. They just released earnings. Now, Walmart is very near and dear to my heart, okay? And you want to know why, ladies and gentlemen? Because it is by far my favorite store that I have ever been to. All these like rich, uppity, sniffing their own farts people like to go to Target or Whole Foods. But if you want a good deal at reasonable prices, you go to freaking Walmart. They have basically everything you need. You go there, you get everything, you go home. I'm even signed up for the Walmart Plus, the Walmart Plus membership. It's $98 a year, and you get unlimited free delivery. You got to tip the driver if you want. Unlimited delivery for free. And you get pickup, you get discounts on fuel. It's freaking awesome. I probably spend like a good 20% of my income, 15 to 20% of my income at Walmart. Great freaking company. Now, let me show you how much I invested in it. $4.39. Why? Well, I got a free stock from Robinhood. That's right. So apparently, if you have the affiliate link for Robinhood, somebody will give you a free stock. Now, let's go check out Walmart, and we'll see what price I would actually really start to buy this stock heavily. Because just to be honest, Walmart I still think is massively overvalued. The first thing we want to look at is the price to earnings ratio. So you come in and you look at Walmart, and before 2018, 2017, 2018, it was trading at a pretty low multiple of earnings, 10, 9, 9, 10, 11, 12, 13. And then all of a sudden it rocketed up to a PE of 53. I don't know if earnings went down or the price went up, one of the two. And then once again, we get another spike. Either earnings went down or the stock price went up. And now it's kind of leveled off at a price to earnings ratio of 30. Even though I love Walmart, and I'm not joking, if I could build a position in Walmart, I would freaking do it. Because it's like one of the few companies I'm attached to. Jeremy likes Tattoo Truckers, Taint Sack, and Kevin likes freaking Tesla, and Amit likes Palantir. I love freaking Walmart. I know it's probably insane. I don't think anybody else likes Walmart as much as I do. I'm a freaking fanatic. But for Walmart to have a PE of 30, that's pretty shocking to me. So I don't know what people are seeing, but we're going to look at the financials, and I'm going to tell you why it needs to drop a lot further before I would consider buying it. So here's the earnings release. Walmart missed as the retailer felt cost pressure from fuel prices, high inventory levels, and overstaffing. Okay. Raised its sales outlook, but lowered its expected profits. So mixed bag there. And the discounter's bottom line was unexpected and reflect the unusual environment as inflation in the U.S. is nearly at a 4-decade high. So some businesses get hurt by inflation. Some businesses benefit. The problem with Walmart is they have very, very, very low profit margins. Extremely low. So if you have your input cost increase just a little bit, you can become unprofitable. And that's what I think is potentially could happen to Walmart. Now, I'll show you their historical profit margins, and I'll show you exactly what I'm talking about. Let's look at it from a quarterly basis. So if we go down to quarterly profit margin, you can see this row right here. It's roughly 2%, 2%, 2%, 3%, 2%, negative 3%, 4%, 4%. And let's look at the annual basis. Let's see if there's a trend in the annual profit margins. 2, 2, 2, 1, 1, 2, or 3, 3, 3. So very, very low margin business. So if you buy a company like Walmart, you're really buying it for the dividends and, potential share buybacks. Now let's look at the free cash flow. Cash flow, my ash flow. So they have positive operating cash flow, but it's really kind of steady. I mean, 2020 was kind of weird, but if you look at it, it's about $25 billion a year of positive operating cash flow. And they have capital expenditures that are not as big as operating cash flow. So they definitely have free cash flow. But if you look at their free cash flow margin, even that's freaking low. 2%, 4%. I think that's a fluke. 3, 3.5, 3.5, 4, 3, 4, 3.5. It's not profitable it's not really profitable at all, or it's not highly profitable. So that's why this business has a ton of revenue, but it's still valued a lot lower than other companies that are way more profitable. That's why revenue, and this is like one of the largest revenue generators in the world. Let's go look at their revenue. In 2021, they generated $572 billion of freaking revenue. 572. I think this is one of the most highest producing revenue companies in the world. I mean, there's maybe one or two others that have more revenue, but Walmart is a freaking king. But that's why I always say revenue by revenue is not that important, because you can have a ton of revenue, just like Walmart does. It's a big lesson. Ton of revenue. But if not a lot of money hits the bottom line, your business ain't going to be worth that much. And if nothing hits the bottom line with a lot of the businesses I see on YouTube, it's basically worthless. Okay. I mean, I'm sure you could value it, but I don't touch those businesses. So if you look at revenue by revenue growth, I mean, even then it's 0.7, 3, 3, 2, 6 out of nowhere. That was stimmy checks. 2, 3. So Walmart is really growing as fast as our economy. And I don't foresee that changing in the future. And Walmart could even peak at some point. It really could. I would not be surprised. So if we go and we look at Walmart in my little tool, I went ahead and plugged in Walmart's trailing 12-month revenue. So with the most recent earnings, it's $574 billion. And they currently have 2.8 billion shares outstanding. Now, if you wanted a 10% return, the historical average of the stock market, we'll put that there. Revenue growth, I'm going to say 2% going forward. Profit margin, 2.5. They're not very profitable. Free cash flow margin, 3%. Not even profitable on a free cash flow basis. PE at disposition, I'm going to go with 10, or you could even do less. Free cash flow, price to free cash flow at disposition, 10. And then a little bit of share buybacks. And I get a buy point for Walmart at basically $60 to get a 10% return. Now, I only buy stocks for a 15% return. So I would buy Walmart below $50. Now, people may think that's insane, because you look at Walmart and it's trading at what, $131? Like, why? I don't understand why it's so freaking expensive. Maybe I'm missing something, but just a quick scan of this stock, revenue's growing slowly. Profit margins are razor thin. It's pretty susceptible to inflation. I mean, people will shop there. They'll continue to shop there. So, I mean, I think they'll maintain profitability in the long run, but inflation could hurt them temporarily. Low free cash flow margin. They have a little bit of share buybacks. You can see the shares are decreasing, 3 billion, 2 billion, a little bit lower, blah, 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 blah. So they're buying back shares. Cool. That's kind of, they have to do that. It's a return value. And then I think they have a dividend. So they're growing their dividends at 2% per year. So, I mean, I don't know. I love this freaking company with all my heart, but just looking at it, it doesn't make sense. It doesn't make sense why it's so expensive. Okay, I guess the PE is 26 now after the recent drop. I guess that makes sense. Look at that. Holy crap. Price to free cash flow, 31? Why? I don't understand. Let's see. Debt to equity. Okay. Debt to free cash flow. That's not bad. They could pay off their debt in 5 years based on their free cash flow. Current ratio, close to 1. I don't think Walmart's going out of business. And decent return on invested capital, 12, 12, 12, 11. I mean, I don't know. I don't freaking get it. Buyback yields, 1.5, 1.5. I don't know, guys. Maybe somebody else understands why freaking Walmart's so amazing, but I don't. I think I'm going to look at Target next, because Target, if people think Walmart's overvalued, I think Target's like freaking insane. Freaking insane. Strawman, I like you more and more every day. I grow on people, man. I'm just a lovely, chipper guy. You know what I'm saying? Walmart got hit today because Tattooed Chef doesn't have 30 SKUs. Imagine if Tattooed Chef was the reason Walmart's profitability went up like by 10%. So like I keep looking at Walmart's earnings like the next year or two, and I'm like, Oh my God, Walmart's profit margin's 5% now, 6%, 8%. What's going on? And then they have, you go check their revenue. And on the top line, they have like, sales revenue. They have, membership revenue. That's the Walmart Plus, which I'm a member of and I love it. And then they have a separate line for tattooed trucker, sweaty, putrescent, shard-covered nutsack. And it's like this massive part of the revenue. So maybe buying Walmart is a tattooed chef play. You know what I'm saying? You get some diversification there. PE of 30. Yeah, I don't freaking get it, man. Let's see. Walmart is now a forward PE. That's not bad, honestly. I mean, but even then, like, look at the historical margins. You think Walmart is going to like somehow explode into profitability? I don't see it, and they're not going to grow fast. They're really not going to grow fast at all. Jesus Christ. This is great advice. Time to go on. Yeah, good luck with that, guys. Why don't you like Costco would actually be a good one to look at from a overview basis. Like, I'm not going to get into the weeds of Costco, but I think Costco is probably overvalued too. That's my gut. But we shall see. Are people speaking freaking French in my comments? This is English only. Jeez. 80 to 100. Yeah, no, I would buy it like 50. I'm perfectly honest. Like, I will wait to buy Walmart at 50. I would not buy anything above that. No way I came to joke. It is Walmart, and it is. If you guys didn't see, I have $4.30 in Walmart. I got a free Robinhood stock, and I was like, should I get Tesla? La Tesla. Or should I get Wally Bialy? Chose Walmart, because even Walmart's not as overvalued as that Tesla. Boeing, I can check out Boeing. Let's see. Costco has great deals. Bullish. Voyager Digital. I need to do Voyager Digital too. Oh, I need to do Grinder. I'm going to look up. So apparently Grinder's going public. I'm going to go look it up right now. And if I have time, I'm going to do some Grinder analysis. You guys are going to love the thumbnail. Anyway, that's it. So if you just tuned in, I would buy Walmart, me personally, based on my assumptions, at $50. It's $131 right now. That's pretty freaking crazy. So you guys, oh, look at that. Gloria Walmart. Hey, are you related to the Walton? Are they the Walton family? Are you rich? What's your number? Hey, maybe if Grinder's profitable, I'll buy it, man. Oh, and by the way, Cole just reminded me, at 8 p.m. tonight, Eastern, we're going to go live and we're going to go through every freaking major Vanguard index fund that you can use to construct a portfolio. So don't forget to tune in at 8 p.m. Eastern tonight. Me and Cole, my butthole, are going live. All right. Anyway, that's it. Grinder research time on my cell phone. And I'll talk to you later. Cheers.